Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is, I think I'm late today. I lost track of time. 5:05. Wow, 5:05. I'm 5 minutes late. Sorry about that. 5:05 in the a.m. Eastern Standard Time, the 29th of July. Okay, so what we're going to talk about is our short strangle trade of Facebook on earnings yesterday. We normally do not buy stock or short stock into earnings. The only caveat to that is when a stock is at extreme overbought or extreme oversold levels. We'll talk about that at a different time. We had no candidates like that so far this earnings season, but we have done well. Microsoft, what else do we trade? What else do we trade, Bob? We'll come back to this. This is our Slack forum. Tesla, Microsoft yesterday, Facebook. I'll talk about the trade in a moment. Let's talk about the after hours price action on Facebook first. Earnings, I believe, were good. Their guidance was absolutely horrible. Absolutely horrible. Forward-looking guidance is expected to diminish moderately. There were two separate headlines. Moderately, one was really even worse than that. When you see a company give a headline like that to their PR press wire release on earnings, buckle up. Buckle up. So you may be asking, all right, so we're not seeing a major reaction. In fact, they tried to rally it back a couple of times last night. Let's go to a 15-minute chart. Thrice, once, 2, 3 times. They tried to rally it back. What gives? What happened? Well, remember that Facebook is one of the big major institutional holds. And a lot of institutions are not going to simply to allow this stock to drop like a rock. It will, but they need to get out first. What do they need to do? They need to carry it a few rounds. You're probably going to get a couple of upgrades of Facebook just so the big institutional money can get out. Don't get suckered in because they're, again, forward-looking guidance due to, I've heard about this already. I was shocked to see that it took so long and that nobody priced this in. Here, Facebook, we continue to expect increased ad targeting headwinds in 2021 from regulatory and platform changes. It cuts off here. Notably, recent iOS updates. You have to opt in to Facebook's app. Opt in on Apple. For those not familiar, iOS, that's the Apple operating system. So it's going to have a major or greater impact on third quarter, comparable sequential earnings relative to the prior quarter. So it's not good for Facebook. So the shares dropped to as low as, what was the low? 354. So really quick update, what is a short strangle? What was our trade here? Well, we sold, not bought, sold simultaneously a deep out of the money call option. We were paid a credit. Simultaneously, we sold a deep out of the money put option. We collected a credit on that as well. So we didn't buy the option. We collected the credit. Now, in short, they deposited into our account. Now, the trade is this. We sold the 400 strike call option with a probability of trading above that strike price of 0.13%. Simultaneously, we sold, keep in mind, at the time, the shares were trading at 374.16. We sold a 347.50 put option. Remember, the lows of the session on that horrible report yesterday, at least forward-looking guidance, horrible report. I don't want to be hyperbolic. The lows were 354. So while it came close to our strike, we still have a buffer. And what's going to work for us today is that implied volatility, which increases dramatically the value of an option, expands considerably, roughly, let's call it in the case of Facebook, about 10% relative to the puts and the calls traded last month. So that what you're going to get today is IV crush, meaning that all that implied volatility is just going to get sucked right out because earnings are over. You'll probably see some volatility to the downside because they're dumping Facebook shares in the morning. You'll get a counter trend rally, and that's going to crush the IV. So we already have an advanced order. You don't need to sit around and watch a computer. Put your advanced order in at around 51, 52% probability profit, and we were paid a credit of $247 per contract. If we get $1.25 thereabouts, we're happy. Today's pay. So that's the trade. Facebook. Tonight it will be either Amazon and or Twilio. So stick around. So a good week so far. This is not money in the bank yet. We have not closed out this trade. When I get the alert on my phone, then I know we're out of it. All right, let's talk about the pre-market activity. As a matter of fact, before we do that, let's go to PayPal. They reported after hours as well. I'm not going to go through all this because I don't want to bore you. But they sold off. I'm going to educate myself on this tonight. Rallied back, faded. So you saw some selling into strength, much as what you saw on Facebook. Qualcomm reported as well. And it looks like they had a good number. Nice move here. The market maker anticipated move was about $6 on Qualcomm. It's amazing how close these guys get. These guys are good, these market makers. And the way we find that out is that we use the proprietary software to help us out with that. And that gives us kind of like an edge. So this was one trade. We weren't going to get paid enough premium to take on the risk. Same deal with PayPal. Facebook was the better option. So we'll continue to do those. All right, let's take a look at, I want to go to the U.S. dollar first. The dollar cratered yesterday on Jay Powell's testimony. We smashed through. This is a 4-hour chart, not insignificant. We smashed through critical support. We are now putting in lower highs and lower lows. Why does it matter that the U.S. dollar is declining? It matters because, well, we're long heavily of precious metals, silver stocks, and gold stocks. So we want a weaker U.S. dollar to help drive those positions up higher, and that's exactly what happened yesterday. So we want to see this continue. Now, this alert, for whatever reason, didn't fire off, but we did break support at 92.073, and we closed there. This is a new 4-hour bar that just opened up a few minutes ago, and this marks a new weekly low. So we're going to be doing Thursday night stock charts live tonight, 6 p.m. Eastern Standard Time here on YouTube. Click the bell button to get notified or use the link below to get notified. 15 minutes to a half hour prior to us going live. And we're going to go over the weekly charts of the U.S. dollar. I'll show you how we're looking at current, but we have 2 trading days left to go. So I'm kind of reluctant to talk about it, but we're going to do it anyway. The dollar, remember, had broken out last week above critical resistance. But I had warned members that we were looking at resistance at prior peaks. And while that it's bullish that we overcame resistance, we have to hold it. We have to retest this breakout point and see that it holds. Well, we did do a retest, except it failed. Why did it fail? It's because Jay Powell, not that it wasn't weak before Jay Powell yesterday, but I think the market read into what was going to be said. Jay Powell, he flipped the switch, man. For all intents and purposes, what he's been saying is that the inflation that we have seen thus far is going to return to normal. It was transitory. Yesterday, he changed that. He went from, hey, Pat, how you doing, buddy? What we're going to do now is we're going to readjust what we meant. I think you guys, meaning the public, you guys, the reporters, misinterpreted what we had to say. No. What we've been saying all the time is we're quite consistent, and we're not transitory. You guys are. What the inflation that we've seen, which is technically in double digits if you go by the import-export prices, not by the manipulated CPI. Well, the inflation that you've seen, that's going to stick around. But we expect the 2% target to come back down to normal. Right. So the dollar, Forex did not like this. Normally you get a rally in the dollar and a sell-off on gold. That all changed yesterday because the dollar just got annihilated. Again, we're going to return to this tonight to see how this looks. If this morning's price action relative to yesterday's close is any indication, it's going to get a lot worse on the weekly chart. But we have 2 trading days left to go. We don't want to rest on our laurels. It looks good so far as precious metal traders, but anything can happen here. We want to be open-minded. Don't get too cocky. So the dollar weak, bouncing back here a little bit. For gold is looking the monster this morning. It's off of its highs, but we broke out above this resistance level, which we've been trading in since late June. We did break out in early July, early to mid-July, but then we broke back down. That's a breakout point failure. And we were even setting up. I don't think I said this once. I observed it, but I didn't think it was going to follow through to the downside. That we had a head and shoulders setup forming, left shoulder, head, right shoulder. I didn't think that we were going to break. I didn't talk about it. But we did break out to the upside. What we're looking for is a negation of this head and shoulders setup. And the negation would be a takeout of the head of that head and shoulders setup and put in a new higher high. Gold, new, weekly, it's more of a monthly higher high. And there we go. Okay. So expect a pullback here on gold, perhaps to as low as $18.20 the ounce. That's about $4.10 away. Why? We're going to get another retest. Just as we got a retest back here and it failed, we're going to get another one. So wait for that retest before you go looking to buy gold. Now, taking a look at silver. Silver up nearly 2 3/4% on the weakness of the U.S. dollar, on the comments out of the Federal Reserve. They're not on the job. They're done. They're not in control anymore. Not of precious metals. Maybe J.P. Morgan is. Let's take a look at some other commodities. Copper. This is for John Spencer if he's up. Bust the stocks. They have to inflate their way out of the... Yes, they're going to have to deflate their way out of the debt. That's exactly what they're doing. They don't want to... They could do 2 things. 1, raise taxes. Cut spending and raise taxes. But what does that mean? Well, it means the social welfare the social welfare plans, they get annihilated. 2, the midterms are setting up, unless there's some nefarious action going on by one of the 2 parties manipulating the vote. The midterms are setting up to be an utter bloodbath. So they can't raise taxes. They can't do it. Not now. Maybe after the election. They can do it to corporations. But and I agree with you as well. And the only other option is a major war. I've been saying that. When in doubt, go to war. That's unfortunately, it's not going to be a small war. It's going to be a near-peer war. Why do you think we have jets buzzing around the Black Sea in Syria? Why do you think the Brits are sending ships into the South China Sea right now? It's not good. I really, really hope I'm wrong. I have kids, and I'm sure everybody out there has kids and grandkids. Yeah, Pat, Nuggets doing well, really, really well. I checked it this morning. It wasn't up all that much in the pre-market, but it's on thin volume. It'll probably spike up. It's only at 58.50 right now. We'll probably close up higher on the day, maybe get a pullback and a retest of support here. But yeah, Nugget, GDXJ looking pretty good. What else do we have? Let's go to equities. NASDAQ 100 down. I really want to get out of that Facebook trade pretty quick today. Note how we're putting in on this 4-hour chart. And I warned about this a couple of weeks ago, that we had broken support. We were rallying back in an effort to try to recapture. What do we do? Yes, we put in a higher high, but we failed to hold it. I think there's a very good chance that the NASDAQ rolls over. Take note of the lower highs on RSI. Before we move on, I want to check out and see what bonds are doing, because what's going to take the air out of tech stocks is the rise in interest rates. And an anomaly occurred yesterday where you had the 10-year Treasury yield rally, but so did the 20-year bond price. So a little bit of confusion there. And the 20-year bond price looks pretty bullish on the daily chart. Now, bonds are down. This is not looking good. So if bonds are trading down, if the 10-year bond is trading down, that means yields are creeping up now. Now, we've corrected quite a bit on the 10-year. And with that correction, it's allowed tech stocks to move up higher. And we do have some room to go. Not a ton of room, but we have some room to go before yields reach a point where tech stocks begin to buckle. So we may not see on rising yields right now a precipitous drop in tech stocks, but if we see a major move higher on the 10-year yield and simultaneously see bonds and the US dollar drop, buckle up. It's going to get real ugly real fast. Now, what we're seeing here is very similar to what we saw on the NASDAQ, in that we broke out, broke down, and now we're putting in lower highs. Now we're going to take our crayon on out yet again. Do we begin to now put in lower lows? If we do, again, it's going to get volatile out there, folks. Now, what will do well in the short term anyway is if we get a pullback in bonds, a rally in yields. Watch your banks. Transports got hit really hard yesterday. I was very surprised. Watch your, what else? Cyclical names, travel stocks, things like that. Airbnb did well yesterday. I got to check on Expedia. Let's go back to equities now that we know where yields are going. And it makes sense. Your bank stocks are probably pumping up higher right now, driving the S&P 500. Well, this is the 400, sorry. The mid caps is not surprisingly doing well. Small caps are probably doing well. We'll go to that in a moment. Let's go to the S&P 500 first. Before we leave, we have the mid caps up over a half percentage point. S&P 500 up slightly. We have a breakout. We have a consolidation. It looks as though the S&Ps are going to shrug off the tech stock moves to the downside and move up higher. The Russell 2000, no shock, up about 0.75 of a percentage point. Because remember, despite the fact that we have poor economic news, the signal that yields send to the small caps, mid caps, banks is that if yields are rising, well, you must have economic growth. It's not necessarily true. Economic data has not been coming out strong, and we have inflation on the rise. So there's going to come a point where yields get too high and economic growth just doesn't support it, and everything rolls over. So more to come here. Tilray, that's right. You brought that up yesterday. Let's go over your Tilray. See what it's doing. Wow. Big move. I love that. It began in the pre-markets yesterday, followed through to the overnight session last night or this morning. Just take note here, Pat. A little bit of resistance you're leaning into right now. Technically, you're above it. You're doing a retest at current. There you have it. Nice run. Daily chart. We broke out yesterday above one resistance level. And now, that's your secondary downtrend line. Now what you're looking for is a continuation move. The pre-market activity is not reflected on the daily chart here. That's why you're not seeing the price above 17. But if you go back to the hourly chart or 4-hour chart, whatever, you're right there. So good looking chart. Maybe the Reddit crowd moves it big. Could be. If there's a big short interest, they'll look at it. All right. What else do we have? I just want to check out other commodities. Agriculture now ripping up higher. Wheat, which has been in a downtrend of late, that appears to be coming to an end. Natural gas correcting a little bit here. Light sweet crude coming back to life a bit, up about 0.75 of a percentage point this morning. All right, let's do a couple of chart requests, and we will wish everybody a fond day. All right, folks, this is going to be brought to you by TrendSpider, automated technical analysis, seasonality charts, scanners, a whole bunch of stuff. Really good stuff. 35% discount code below. Use the link below. And let's go to some, I think I have 3 to go over. I just got to check out the members area. All right, we have SMH. This is the Van Eck Semiconductor Fund. Now, we broke down the week of July the 12th. Last week, a big reversal bar off of support. I think I have an alert set here. No, I don't. We have a bullish key reversal bar this week, looking good. 2 trading days left to go. So we can't count the semis as being a strong week yet, because a lot can change between now and the close on Friday. Now, yesterday was good price action after the Fed news, because what we did is we broke out above daily resistance, and we also broke out above a big volume shelf at 256.80. What I look for here is a retest of support keep a little bit of sensitivity on, not much. A little bit, but there you go. And depending upon yields, you could buy them, but just be careful. Yields are pressing up higher this morning. That's not good for the semis or tech as a whole. Right now, you probably have a little bit of wiggle room for yields to move up higher and still have tech move up higher. Just be careful. There's going to reach a point, 1.5, 1.6 on the 10-year yield, where it just becomes implausible to own tech. And we'll keep this active for 5 days, and we're good to go. SMH looking good on a daily breakout. Caveat, watch out for yields. SPCE. All right, so this was a Sell the News event. Sir Richard Branson went off into, I guess, outer space, inner space, whatever they call it. It hit our support level. This was our price target at around 28.25. It hit it this week. It is now reversed, and it's ready to be, let's get rid of this. This triggered a potential buy. Fat premiums on this. Pat, I know you like SPCE. You thinking about trading options here? Daily chart. Now, the daily chart, kind of in no man's land. The trend is still down. You want to argue that, yeah, we broke out yesterday? Okay. But your stop loss point has to be 28.28 per share. What was the high? 57.51. Hey, you know what, Pat? Somebody nowadays has to show the flag. I mean, my God. The culture war is brutal. These colors don't run. All right. The last one up was what we have, Boyle. This is a leveraged ETF that puts you long of natural gas. We did well with this one, but it has pulled back off of resistance. We were a bit oversold relative to the 2 standard deviation Bollinger Band. In fact, today we get nat gas inventories that come out, and That comes out at 10:30 a.m. Eastern Standard Time. So that can move the price of natural gas. So just be aware of that if you're looking to buy this. So I would look for a further correction here before I got involved. I like support right here. 28.64 looks interesting. Daily chart. Yeah, bearish key reversal bar yesterday. No new daily low, but I think we're probably going to get it. And look for a retracement right down here. And that would be a, what did I say? Did I misread that? 38.64. I think I said 28.64. My apologies. 38.64. So 38.64, looking for retracement back down to that level. At that point in time, it hits our radar screen. In fact, let's create an alert. We'll keep some sensitivity on there. It's in a major bull run. It doesn't have to be on the dime, your support level. And we'll keep this active for a couple of weeks because we really like natural gas. And there you have it. And all our alerts are set right here. And I want to check out the seasonality. I'm just going to bring up the UNG. There's probably more data for the UNG in terms of seasonality. UNG is not a leveraged ETF for natural gas. So more historical data. This only goes back 8 months. We want further than that. This brings us back 14 years. July, not a good month except for this year for nat gas. It improves significantly in August. So natural gas, we're probably going to get a continuation move up higher given the trend. And the trend is clearly up. And with that, folks, everybody have a profitable trading day. Members, I'll talk to you tonight. Till then, be well. Oh, as a matter of fact, don't forget, Thursday night stock charts live for everyone, not just members, for everyone tonight, 6 p.m. Eastern Standard Time. Join us there. Click, like, unsubscribe, subscribe, like, dislike, whatever you're going to do. Take care, folks. Be well.